let's say that you're operating as a sole proprietorship and you're making $80,000 in profit, as an example. If you are operating as a sole proprietorship, you're going to pay your regular income tax rate on that $80,000, plus you're going to pay 15% in self-employment taxes. So whatever rate bracket that you're in, you're going to pay that on that $80,000 plus 15% in self-employment taxes. If we take that same LLC,
which is 12 grand.
Yep. If we take that same LLC entity and say, let's elect for that entity to be taxed as an S corporation. Now we need to run reasonable payroll to ourselves. And let's say that reasonable payroll for that is $36,000 or $40,000. So half of what your profit was is now your salary. Now we're going to pay self-employment taxes on our salary. It's not called self-employment taxes. It's called Social Security, Medicare, FICA taxes, but it's the same number as same 15% as what self-employment taxes was. But we avoid self-employment taxes on any income that we make over and above that reasonable salary. And so that's where the savings with an S corp is. Now, people will say, well, how about I just run a salary for $1,000 and just take the rest out as no salary? That's where the IRS will start to come after it. So part of the S corp is you need to take a reasonable salary based on the work that you're doing, hours you're putting in, all those different things. And so we want to take as low as a salary as possible, but making sure that we're staying above that mark of what the IRS would consider reasonable for that salary.
So out of the $12,000 you normally pay in self-employment tax, how much would you save on that?
Yeah, so in that example,
on $80,000.
Yeah, on $80,000 of income, you're saving probably $5,000 to $6,000 in taxes, in self-employment taxes.
Right. So instead of $12,000, you're paying $8,000.
Yeah. Now, difference is now we're running reasonable salary payroll. So if you don't have employees to begin with, now you do have employees yourself as the owner. So there's some cost there. Typically, say $60 a month in payroll costs for the software that you're going to use to handle and manage that payroll for you. So there's some cost there. And then the second piece is that with an S corporation, you have a more complex tax return. So you have a business tax return that you would then file or get a K-1 that reports on your personal tax return. So you have business tax return and a personal tax return. If you're just operating as a single member LLC or a sole proprietorship, you just file your business activity right on your personal tax return. So there's some added cost to that. So that's why we say we typically make sense to do an S corp once you get $50,000, $60,000 or more, because the amount you're going to save in self-employment taxes at that point is going to outweigh those two added costs, the payroll costs and the more complex tax return.
But then also you got to remember, and I'm just being the other side, devil's advocate. You now have to pay yourself, when you pay yourself as an employee, you have employee cost to the state also about 7%. I know that is here in the state of California. So that you have, every time you do payroll, you have to, your part as an employer, you're privileged to have the employee. You still have to pay that as an S corp, right?
Yeah. So as the S corp, then what you're paying is, as the employee, you pay about 7.5% to Social Security and Medicare, and the employer pays about 7.5% to Social Security and Medicare. And that's where that 15% comes from. It's actually 15.3%, but that's where it is. So as a self-employed individual, you pay all of that because you're the employer and the employee. When you hire yourself as an employee, you pay it as an employee and as employer. So employer essentially is paying all of it. Then over and above that, you have federal unemployment and state unemployment. So those are the two additional payroll costs or tax charges that you have with an S corp that you wouldn't have had if it was set up as a sole proprietorship or single member LLC. Now, those numbers are usually relatively pretty low. So, like federal unemployment, I think once you hit about $7,000 or some number like that, you're no longer paying it anymore. So those federal unemployment, state unemployment are usually fairly minor costs to the employer. But yeah, there is that additional FUTA and SUTA that you add on to it as well.
So what I'm hearing is going from a sole proprietor to an S corp, it's the same cost. It's just who pays it. Because it's only the legal protection.